Welcome to the Capital Spreads Weekly Update. Today is Wednesday, the 2nd of November 2011, and the soap of Europe continues as saga after saga. It very much reminiscing EastEnders, and it seems to be continuing, this time with Greece throwing a massive spanner in the works as the Prime Minister there calls for a referendum on their most recent bailout. That caused the markets to seriously sell off significantly, and we await to hear when that referendum will go ahead. It's very much going to go ahead. It's been passed by the Greek Parliament, so the delay, what will that cause? And if a no vote does happen, what will that mean for the Eurozone? More of that on the theme of the week. That's definitely the highlight of proceedings at the moment. So that's caused markets, as I mentioned, to sell off. FTSE at the moment is around 5,400, the Dow 11,770, and it's caused the euro to sell off quite a bit too. Euro dollar at 137.85. Sterling's remained relatively strong in the face of this risk aversion, just below 1.6 at 159.85. A beneficiary, of course, has been gold, which did dip below 1,700 but has bounced back strongly. It's at 1731. For Brent, things have been very volatile, as they have across all markets, but it's stayed pretty much flat on the week. It's at 110.10. The other highlight of this week was actually decent UK GDP numbers. They came in better than expected, but the problem is that the expectation is that Q4 will be very tough, and Q1 into next year. Many people calling possibly for a technical recession. We bounced well in the third quarter, but that's off the back of Japan recovering from its earthquake, and also the UK economy in general recovering from lots of bank holidays in the spring. So it's an encouraging sign, but whether it will be maintained is another matter, in particular when so many growth forecasts are being downgraded, in particular across Europe and other parts of the Western economies. So at the moment, as mentioned, the FTSE is around 5,400. I've got a chart here for it. The key question here is the past resistance around this level. As you can see from that line, which is where the market rejected several times attempts to get above it, it then eventually did. And the theory goes is that previous resistance becomes support. So will this level hold up? That's the big question. We've seen a few buyers tentatively coming in. So that's what clients are doing at the moment. They're slightly long the FTSE and long the DAX, but conversely, they're short the Dow. On commodities, they are long gold, no surprises there, but they are short oil. For currencies, the client position is still short the euro. They believe that the euro has further to correct, so they're largely short euro dollar. The rest of this week, well, there's lots to get involved in. There's later on this afternoon the FOMC meeting and interest rate decision. What will their outlook for growth be? That's going to be key. Tomorrow we have UK PMI services data. Now, the manufacturing PMI number earlier this week was very poor, and it dipped below 50. What will happen to the services number? That, of course, is closely watched by economists for that prediction of GDP. So any softening there will reiterate people who believe that growth will be hard to come by next quarter and Q1 2012. Also tomorrow we've got the ECB interest rate decision, expectations for a cut there. So the new ECB president, his first action will probably be to reverse the hikes that were implemented by Trichet. And then on Friday we've got non-farm payrolls. They're expected to come in at 100,000. But also tomorrow and Friday, of course, we've got the G20 meeting. So lots and lots to focus on. It means that volatility will almost certainly remain high for the markets. But that leads us on to the theme of the week. Well, the theme has to be this referendum. It's come as a huge surprise to the market. That's why we sold off so aggressively. Markets don't like uncertainty, they don't like surprises, and that was certainly not expected at all. So the referendum could possibly go ahead in December. We await confirmation of that, but any delay, of course, is going to make things more difficult for the EU's summit plans that were agreed last week. Of course, they need ratification in the Greek Parliament. This referendum's just going to get in the way of that. A no vote is the worst case scenario, of course. That will ultimately lead to a Greek default, and then who knows from there? Is this the beginning of the end for the Eurozone? That's it for this week. As ever, do give us feedback, media@capitalspreads.com.